Hey everyone! Welcome back to our channel. I hope you're all doing well today. If you're interested in the world of real estate, then you're in the right place. Today, we're diving into a fascinating topic that affects not only homeowners but also investors and the economy as a whole. What happens to real estate when interest rates go down? So, grab your favorite drink, get comfy, and let's get started. But first, let's think about a key question: why do interest rates matter for real estate? Well, the answer lies in how they influence borrowing costs, which can have a ripple effect on the housing market. When interest rates decrease, it becomes cheaper for people to borrow money. This means that mortgages become more affordable. For example, let's say you're looking to buy a home for $300,000. With a 4% interest rate, your monthly payment could be around $1,432. But if that rate drops to 3%, your payment could go down to about $1,264. That's a savings of nearly $170 every month. Lower monthly payments mean that more people can enter the housing market. This increased demand often leads to higher home prices. In fact, according to a report by the National Association of Realtors, home prices tend to rise by about 10% during periods when interest rates drop significantly. So, if homeowners are looking to sell, they might find themselves in a favorable position. For sellers, lower interest rates can lead to quicker sales. With more buyers in the market, homes can sell faster and often at or above asking price. In a recent study by Zillow, it was found that homes sold during periods of declining interest rates were on the market for an average of 15 days less than during periods of high rates. So, if you're thinking of selling, now might be a good time. Now, let's talk about investors. When interest rates go down, real estate becomes an attractive investment opportunity. Lower rates mean lower borrowing costs for investment properties as well. Investors can leverage their funds better, allowing them to purchase more properties or invest in renovations to increase value. For instance, if an investor takes a loan to buy a rental property, the lower interest rate means they have more cash flow after accounting for mortgage payments, making it easier to manage expenses and achieve profitability. Additionally, when rates are lower, rental demand tends to rise. As more people opt to buy homes, some may still find renting more suitable for their current situation. This can lead to an increase in rental prices as demand outpaces supply, benefiting landlords. According to the U.S. Census Bureau, rental rates have shown a consistent upward trend during low-rate environments. However, it's not all sunshine and roses. While falling interest rates can stimulate the housing market, they can also lead to concerns about affordability. As home prices rise, first-time buyers may struggle to get into the market. This could push them toward lower-quality homes or less desirable areas, which could create disparities in housing quality and access. Moreover, lower interest rates can also have an impact on the broader economy. When more people invest in real estate, it can lead to increased construction activity, which creates jobs and stimulates local economies. However, if the rates remain low for too long, it can create a bubble. Prices might inflate beyond what people can afford, leading to a potential market correction down the line. Historically, we've seen this happen before. The 2008 housing crisis was, in part, fueled by artificially low interest rates that encouraged risky lending practices. While today's market is different, it serves as a reminder that while lower rates can boost real estate, they can also lead to risks if not managed wisely. So, to summarize, when interest rates go down, borrowing becomes cheaper, demand for homes rises, and prices often increase. This can benefit sellers, investors, and the economy, but can also lead to affordability issues for buyers. It's essential to stay informed and consider both the opportunities and risks involved. If you found this video helpful, don't forget to give us a thumbs up and subscribe for more real estate insights. Also, share your thoughts in the comments below. What do you think about the current interest rates? How do you see it impacting your area? Thanks for watching, and see you in the next video.